Did you know that scams involving your tax return are so common that the IRS itself lists what they call their dirty dozen, the scams that are very common and are hurting a lot of everyday Americans? These are the ones that the IRS wants you and I to be aware of. So let's jump on their website and let's go through this report together. I love the fact that they call this the Dirty Dozen report. It makes it very approachable and makes me want to read it. But then they start off with, a fairly technical sounding provision, which is the employee retention credit claim. And essentially this is from the COVID era where companies were getting paid money to keep employees on staff. And there was a rush there, right? Because COVID kind of hit quickly and impacted so many of us so quickly that the government wanted to err on having that money go out to companies, even if it meant that a couple scammers got away with things that they shouldn't have. And now they're cleaning that up. Now they're going back and saying, hey, companies that took advantage of this, we're going to come after you. We're going to say you shouldn't have done that. So the first one kind of sounds technical, but let's keep going. The next one is a term that most of us have heard. It's phishing and smishing. And phishing is when they scammers send an email and try to get you to click on a link. And smishing is just when they use your text on your phone to do that. So, there's a lot of people now, because scams are so prevalent by phone, they say, if I don't recognize the number, I don't pick up. And I want you to remember that your cell phone is a tool to make your life better. And just because your cell phone rings doesn't mean you have to pick up. Just because somebody sends you a text message and says, hey, it's so-and-so from college. If you don't recognize the name, don't reply back, because there is a scam where they then try to develop a relationship with you. Later down the road can cause you not millions of dollars, good, but thousands of dollars. So just be careful with that. And particularly with the IRS, is people posing as the IRS. Okay, the next one I want to talk about is a false fuel tax credit claim. Now, my grandfather was a farmer, and when he was farming long enough ago that, he was using a horse for many of those years, but towards the end, he did have a tractor. And when he bought gasoline at the local gas station for his tractor, he didn't have to pay the federal tax on the gasoline that is really designed to keep our highways open, right? My grandfather was using his tractor to plow his fields, and he wasn't using the highways. So the government allows you to get a tax credit back for the money that you spent. But, there's aggressive promoters that are saying, oh, you can get money back for all the gas that you bought. And you know what? We're going to come to this term several times. If it sounds too good to be true, you know what? It's too good to be true. So be very careful on it. Here's one that really hurts, and unfortunately, it not just hurts the victims of the scams, but also the people underlying the reason folks are open to helping out. So I'm talking about fake charities. And these normally take place after there's been a natural disaster. Good charities that are doing good work are going in and helping those folks out. But what will happen is these scammers will set up fake charities and make phone calls and send emails trying to get money from potential donors. But here's the thing. You get a deduction off your taxes for charity, right? There in the tax code, I'm not an accountant. None of this is financial advice. But in the tax code in general, you make a donation to charity. The government wants people doing that, and so they kind of support us through the tax code. But that's for a qualified charity. So what happens if you make a donation to a fake charity? Well, unfortunately, you don't get that write-off. The IRS is like, that's on you. You have to do your homework. Now, you might be able to use it as a write-off, and the IRS talks about that on their website. Okay, another one is the IRS wants to warn us about unscrupulous tax return preparers. And the IRS says on their website that one of the indicators of this, one of the things to watch out for, is tax preparers that want a percent of your tax refund. They may say, well, I want to be on the same side of the table as you. I'm working hard to save you every dollar you legally deserve. But you know what? Sometimes these people cross the line in order to get their percentage of your tax refund. And they try to encourage you to do certain tactics that are not in your best interest. So the IRS is just warning you there. The other thing, you're watching this on my YouTube channel, and the IRS is warning people, be careful with social media. Be careful when they talk about, you can do certain strategies. And the IRS specifically calls out strategies involved, what the IRS says is falsifying your W-2 form, which is, as an employee, that's what we get from our employer. This is how much we earned this year. And then there's also a Form 8944. And it turns out, and these are being improperly promoted on social media, but it turns out Form 8944 is real, but the IRS says it's intended for a very limited, specialized group. And both of these schemes, the W-2 and the Form 8944, both of those groups are encouraging people to submit false, inaccurate information in the hopes of getting a larger refund. And you know what? That tax preparer that maybe you gave 10% of your refund to, if that guy or gal's a scammer, guess what? That person's long gone when the IRS sends you a notice and says, hey, we need to talk to you about this 8944 form. Okay, let's keep going. The IRS is also warning tax professionals, people that help you and I, hey, just be super, super vigilant with your systems because, hey, tax preparer, you are a target to these scammers. So be extra cautious with your cybersecurity and be careful of spear phishing. Okay. Now, another one, and this is a technical term, I think it's a legal term, and the IRS is warning us about what they call offer in compromise mills. So an offer in compromise is really intended to help taxpayers that can't pay their tax bill. And the taxpayer is going to give the IRS an offer in compromise and say, I owe X dollars in back tax and I can't afford that, but here's what I can afford. Will the IRS take that instead? And so the IRS is just warning that this is being over-promoted and could be abused, so be careful. Okay, now for folks that are higher income earners, you're not immune from this either. In fact, your returns are probably larger, so there's more upside for the scammer, unfortunately. So you have to be super careful. And here's some of them that the IRS points out. One is a charitable remainder annuity trust. And this is where you make a donation to a charity and the charity gives you income for life. And then at the end of that, let's say you give them a $100,000 stock portfolio. At the end of that, the charity gets to keep that money. The IRS is just warning that this can be abused. And there are guidelines that kind of take you right down the middle of the fairway if you're going to use something like this. And the IRS is just, letting you know, hey, this is on our radar screen. We're watching this. So stay in the middle of the fairway with how you're setting these up. Don't try to get too tricky because we know all the tricks and we're watching. Okay. And then there's a couple other for our high earners, bogus tax avoidance strategies. And there is, on the insurance side of things, there's some tax advantaged ways to save money and to build up money for your retirement. But the IRS is just saying, be careful because it's called captive insurance. They've seen that abused and they don't want you to abuse it. And I don't want to see you get hurt. And I also don't want to see you miss out on the youth of your senior years. And for that reason, I want you to watch this video up here. Thanks for watching this one. Bye-bye.